Hey everybody, I'm Tony Guerin with RE/MAX Professionals Guarantee.com, results that move you. I'd probably say the biggest topic that's being talked about right now in terms of the market is the rise in interest rates over the last several weeks and what that means for the spring market. Currently, mortgage rates are trending upward. This graph shows the mortgage rate trends going all the way back to June of last year. And you can see as we went throughout the last 6 months of last year, interest rates started to trend up in the fall. This was essentially caused by pessimistic views on inflation along with some uncertainty, fear, and the instability in the market. As you can also see from this graph, the interest rates peaked back in November, and clearly we may be headed towards another peak in the coming weeks. But around November of last year, we started to get some good news relative to inflation, leaving some thinking, well, maybe it's not as bad as we thought, and interest rates started to trend down. And what happened next? Well, with lower interest rates, we saw a big increase in consumer spending, which is bad for inflation. And in the last few weeks, the message was essentially that maybe we're not out of the woods yet, which led to another spike in interest rates. Sam Katner from Freddie Mac said this: "The economy is showing signs of resilience mainly due to consumer spending, and rates are increasing. Overall housing costs are also increasing and therefore impacting inflation, which continues to persist." From this statement, we can see that we are still in a volatile market with a lot of going back and forth about what exactly is going on and what's going to happen with inflation and interest rates. So where do we look, or what can we look at to get an idea of what's happening? Well, a good place to start would be taking a look at the 10-year treasury rate. We always want to remember for the last 50 years, the 30-year mortgage rate has moved in unison with the 10-year treasury rate. And if you go back for the last 50 years, you'll see this sort of tandem relationship. Shows wherever the 10-year treasury goes, whether up or down, the 30-year fixed mortgage rate is going to follow with an average spread of 1.7% between the two. But if we take the average spread and we look at just the last couple of months, which was the beginning of this year, that spread has jumped to an average of 2.7% and most recently 2.9%. So if you take the 30-year mortgage rate, the 10-year treasury rate at 2.9%, you'll get the average daily rate of 6.88%. So what is the spread? The spread is basically a measure of fear. That's fear economically, that's fear in the world, that's fear relative to the market. So as we go on, we want to continue to watch that. How do we get control of this fear, okay? Well, a lot of the market is out of our control, but one great way to overcome some fears caused by the market is to watch some of my amazing videos, or to simply just stay informed so you have an idea of what is happening in the market and you can make the best decisions for you and your family. All right, so this wraps it up. Hey, my name's Tony Guerin with RE/MAX Professionals Guarantee.com, results that move you. If you ever need anything, hit me up. I'd be happy to help. See you around.